All right. And we are live. All right. For some reason, it's counting down in negative numbers right now. So I guess now we're live, everybody.
Okay,
Now we're live.
great.
All right, cool. So welcome, DoorGrow hackers, to the DoorGrow Show. If you are a property management entrepreneur that wants to add doors, make a difference, increase revenue, help others, impact lives, and you are interested in growing your business and life, and you're open to doing things a bit differently, then you are a DoorGrow hacker. DoorGrow hackers love the opportunities, daily variety, unique challenges, and freedom that property management brings. Many in real estate think you're crazy for doing it. You think they're crazy for not, because you realize that property management is the ultimate high trust gateway to real estate deals, relationships, and residual income. At DoorGrow, we are on a mission to transform property management businesses and their owners. We want to transform the industry, eliminate the BS, build awareness, change perception, expand the market, and help the best property management entrepreneurs win. I'm your host, property management growth expert, Jason Hull, the founder and CEO of DoorGrow. Now, let's get into the show. And today, I am hanging out with John Higgins of Steady Marketplace. John, welcome to the DoorGrow Show.
Great to be here, Jason. Thanks for having me.
So, John, you've got a really big bio and you're really impressive. Do you want me to read all of it?
You can read whatever you want to read. I'm not that impressive. I'd say you're more impressive hosting this show and with your following in the space. I'm just a guy trying to make a difference.
I appreciate it. I think that's what every good entrepreneur is trying to do, is make a difference. At least I hope. Otherwise, they're just causing problems. All right. So, I'll read a little bit here. So it says you are the CEO, co-founder and CEO of Steady Technologies, Inc., a leading technology platform for property owners and property managers. Steady, through its subsidiaries, offers financial products that benefit property owners and managers. Our first product is rent default insurance, offered in partnership with a top U.S. insurance carrier that is a Fortune 100 company, rated A+ by AM Best and S&P. Prior to co-founding Steady, Mr. Higgins founded No Badir Advisors.
Correct. Yeah.
Did I say that wrong?
No, that's right.
Oh, wow. Okay. Which provided business development and capital market expertise to technology-enabled lending platforms across a variety of consumer and business lending verticals, and were backed by the top venture capital firms globally. Prior to Nobadir, Mr. Higgins spent 2.5 years at Prosper Marketplace, Inc., where he helped build the institutional loan program, growing it from $0 to over $5 billion.
Correct.
Over his tenure, and helped scale Prosper's monthly origination volumes over 4,000% during his time at the firm. Mr. Higgins also previously served as a director at Topwater Capital, now owned by, you're going to have to help me with this one.
Leucadia. Leucadia is
I got it.
bought Jefferies, the investment bank. Now it's just Jefferies. It's been rebranded, but
okay. Correct. So where he made investments between $5 to $100 million to hedge fund managers across a variety of strategies via structured managed accounts. Prior to Topwater, Mr. Higgins spent 5 years working for event-driven, distressed, and activist hedge fund managers with assets as large as $1.85 billion. So there's a lot of big financial numbers here, John. A lot of big financial numbers.
So, want me to dive a bit deeper on it and summarize for you?
Let's dive. But tell us a little bit about how you, let's dive into that, and then tell us how you got into all this.
Sure. I can start from how I got into the hedge fund space, which led me through here. Okay. Brief. So I talked my way into an internship my junior year of college, totally unqualified at University of New Hampshire versus people that are top of their class at top business schools. Got a shot to join a big hedge fund on the way up, worked my tail off that summer, and got a full-time offer. So I joined that firm full-time after I graduated college. Was really lucky, worked with a really brilliant entrepreneur there who had started his business with $500,000 and 4 years later grew it to almost $2 billion. Then left that company and went to Topwater, where I was investing in in hedge fund strategies via structured managed accounts, kind of across event-driven, long, short, and distress. credit. That company was acquired by Leucadia, which is now Jefferies, the investment bank. The two merged. Leucadia always had a big stake in Jefferies, long story anyway. As that transaction was transpiring, I was approached by the former management team at Prosper Marketplace, who I had known from the hedge fund industry. They had great entrepreneurs, had built and sold a company that served hedge funds called Merlin Securities. They were backed by Sequoia, sold that business to Wells Fargo, and decided they were going to take over Prosper. So they reached out and said, we're looking for someone to help us build out this business as we take it over and turn it around. Really fortunate to work with tremendous entrepreneurs and a tremendous team there. During my time there, we went from about 50 employees up to about 600 plus when I left. And that was my first foray into more pure play technology. We're a financial technology platform where we're offering unsecured personal loans online to end consumers. So think about going online, applying for a personal loan, no human interaction, risk-based pricing, and can get your loan in a matter of days, as opposed to having to leave your house and go to a bank, et cetera, and fill out paper forms. So after leaving Prosper, I was consulting for various lending platforms, as you touched on in the intro, and got the itch. Got again to work with tremendous entrepreneurs across a bunch of different verticals. And one of the people I got to work with was doing some lending into the small landlord space, fix and flip lending, and also rental lending. And I started looking at the opportunities. I said, this is really interesting. I know of all these products that help multifamily owners protect them, against bad tenant outcomes. There's a lot of companies that popped up doing that, but no one's really going after a single family. And so I started looking at the space and the opportunity. And as you and everyone else in this space realizes, it's actually bigger than the multifamily space. When you live in New York, everyone thinks rental property. They think the big high rise. Well, in fact, there's roughly, 16 million single family rental units in the US, and then another 8 million duplexes, triplex, quads. And all in all, you have about 20 million rental units in the US owned by individual investors that own less than 10 units. And so these owners actually can't solve for this risk, which is if a tenant goes bad. The smart owners are getting professional property managers who are actually, better at picking tenants, have established processes and procedures for getting bad tenants out, and can help manage those properties and have better outcomes. But there's still, when there's a lost rental income due to tenant default, there was no protection. In fact, my business partner and co-founder, Viken, he had a property in New York City that he was renting. Person just skipped town in the middle of the night. He was left with over, I think it was close to $20,000. It actually might have been north of $20,000 loss because the tenant just left the unit, didn't say anything. It took him a while to get it re-rented. And he had no coverage. Or no protection against that. If he had Steady or some of these other providers that are popping up, he could have indemnified himself from that loss and could have been made whole for a modest premium. So long story short, there's a big need in the market for this type of product. And what we're really excited about is working with all the property managers across the country to help introduce this product to underlying landlords and find ways for everyone to win.
Cool. So let's talk about the product specifically. So explain this to somebody that's never heard of this, and maybe they're just, they might even be an unseasoned property manager. But what problem, you mentioned briefly, but describe the problem that exists that this
solves for. Sure. So when you look at it, if a tenant goes bad, whether it's professionally managed or not, but let's focus on the professionally managed properties, since that's really who we're serving here in this podcast and who we speak to. Yep. A professionally managed property, if their tenant goes bad, the owner is mad at them. They might lose that door because guess what? They probably picked the tenant. They were entrusted by the landlord or the owner to find the tenant and select the right tenant, and now the tenant's bad. So owner's mad. They might lose that relationship. And the owners lost their rental income, and as a result, property managers also lost their property management fee income because they generally are charging based on the property management fee. So if you look, just take a step back, if you look globally, across Australia, New Zealand, and Europe, this type of insurance product, rent default insurance, is widely available and widely adopted. And the reason for that is that and if you look in other jurisdictions, primarily Europe, it's kind of flipped from the U.S. It's about 70% renter, 30% owner. As we know, post great financial crisis, more and more U.S. consumers are now choosing to rent instead of own. So the property management space is getting larger, and the rental property market's getting larger. So as this is occurring, we think that more and more people will be in need of this insurance because we have a growing market. The insurance itself indemnifies, and there's different flavors. We'll speak generally about rent default insurance and kind of what's out there as opposed to Steady specifically, because what we want to do is educate the market on the availability of these types of products. And so rent default insurance, generally speaking, indemnifies the owner against losses as a result of a bad tenant outcome. So it could be eviction, tenant skips, et cetera, different programs to different coverages. And what this does is allows the owner who can't self-insure due to diversification to recoup losses if they are unfortunately stuck with a bad tenant that stops paying rent or needs to get evicted. And so the products, different people have different approaches to it. Us at Steady, we've taken a lot of the learnings from the online lending space and using technology to streamline processes and operations and try to deliver a great product at a reasonable price to the end market. And so in property managers, what we're doing is a lot of property managers are saying, hey, this is great. This is a huge concern that my underlying owners have. What happens if the tenant doesn't pay rent? And you see property management companies out there that have eviction protection plans or other plans, and you've got the SureVestors and the Rent Rescues and a bunch of other great companies out here all serving for these types of risks and helping solve these pain points. And the reason for that is this huge market, it's a huge concern. If you've got one property and say you own a home and you move for work across the country and you can't sell your home or it's a family, whatever reason you have it, you put it with a professional property manager, they're managing it, but you're relying on that cash flow for maintenance, upkeep, taxes, et cetera, and in many cases to pay the mortgage. So if that tenant goes bad, all of a sudden break even or cash flowing property gone upside down, and now you're coming out of pocket and you now have a liability that you have to come out of pocket for every month. And so that's a big pain point and a big concern. And so what these types of products do is solve for those types of risks and help landlords have peace of mind and protect against bad tenant outcomes.
Right. Okay. So now you name dropped some of your own competitors, which is very generous of you. So how does Steady stand out or differ? How do you kind of compare or stand out or differ in this space?
So we've taken a bit of a different approach on how we constructed our product and policy. I think a lot of other competitors, and not just in this space, but insurance generally, what they do is kind of copy and paste what other products work in other markets or other products that other people have launched, and there's not a lot of innovation. And as a result, we haven't seen a huge take rate for these types of products in the US. What we found, and you might feel differently, but my business partner, Vic, grew up in Paris. What works in Europe doesn't necessarily work in the US. What works in Australia doesn't necessarily work for the US. So what Vic and I did when we came together is we deconstructed how these programs work globally, and then took a lot of the learnings from online lending to make it, to build what we believe is a better program here in the US. And so one differentiation is automation. Our entire process is fully automated. And so, we just had an email prior to this podcast or this event saying how we're now in 20 states. We've got the ability to be in all 50 states. The reason we're not in all 50 states right now is because we want to automate everything. So it's kind of go slow to go fast. So as we start to take off here and ramp, because the uptake's been very strong and is continuing to grow stronger daily, everything will be automated. And what that will result in is more efficient processes and procedures and better pricing. And
so explain what that means so everyone understands, because you're saying that automation is kind of a differentiator and that it's fully automated. What's automated?
So people can go online to the website and inquire about rent default insurance on their own and complete the entire process in less than 2 minutes.
Okay. And
now,
by people, you mean property management?
Yep, a property manager or a property owner. So there's no human interaction necessary, and they can do everything themselves. Now, newer company, newer brand. We're lucky to be aligned with a very strong brand in the insurance space. But and listen, nothing's perfect, as you know, as an entrepreneur. You think you've got something perfect, and then you realize you need to make it better. And that's how the process works: is constant iteration to get better and better and better.
Yeah.
And so,
Only perfect businesses are out of business, as one of
right,
my coaches
right.
says. Yeah.
So, so we're continuing to constantly pushing new development releases and streamlining things. But what we believe is that if you can make the process as easy as buying, say, for instance, travel insurance when you're buying a flight, and make it that easy, that would be a great outcome for us and for this market. And the way in which I believe you can do that is through API integrations, the right product structures, the right creativity, the right business development strategies, et cetera. And if you look at our product, our technology is our technology, our product's our product, but the two weren't built separately. They're built together. So they work very closely together and in tandem. And because of that, it allows us to deliver a great customer experience, a frictionless process, high scalability, and keep headcount low. Right now, I mean, our biggest expenses have been legal and engineering, as you can imagine, as a technology company. But legal because we invest heavily in making sure that we do everything right and by the book, and more, yeah, and also that our partners do things right and by the book. As you know, the property management space has, in some instances, people have more of a cavalier or cowboy type approach that works until it doesn't. And for us, we have ambitions to be a very large company, and we operate in a highly regulated space. So it's non-negotiable for us to run into issues on the regulatory front or have our partners run into those issues. So we take that very seriously and focus in on making sure everything's done the right way.
So that makes sense. I mean, the number one challenge when it comes to any sort of solution or software or third-party service is adoption. It's how easy is it for them to adopt this and to use? Because if adoption's a challenge, then it's not going to work. It's not going to grow. People aren't going to use it, or it's going to be confusing or frustrating. So, you know, I'm a big Apple fan, and Apple's made adoption very easy. My AirPods, I just pulled them out, opened them up, and my phone just showed them on the screen, and like they connected. It was like magic, right?
Yeah.
And so it's easy. I didn't have to fiddle around with weird Bluetooth settings or hold down buttons, or, And so I think what you're saying makes a lot of sense. Now, you had mentioned that it's easy for the consumer or for the property manager. And one challenge that I see a lot of firms run into is when you're servicing an audience that's servicing that same audience, you almost can become competitors with them. So how do you negotiate that, and how does the property manager, still have a competitive advantage against them just working with you directly?
Well, one thing is, I guess education, awareness, understanding. People don't. This is a massive market. People don't even know about this product. One parallel I draw frequently is pet insurance. I've got a pet. I've got a dog. He's 5 now. I've got pet insurance on him. I pay, I don't know, $70 or $80 a month. They got me on a good plan because the vet at the time said, hey, you should consider pet insurance if there's ever an issue. So to me, the asset there is the pets, a little bit different than a rental property, maybe not as emotional a rental property would be. But, and they said, hey, maybe you should look at this. I think a similar thing is what you're seeing happen in the property management space. Property managers are the fiduciary, the trusted advisor to the asset and the asset owner, which is the landlord or the small rental property owner who's contracted the property manager for their services. And if they can be introduced to this product, it's to their benefit. We don't have a big direct push. We're not looking to go after single family rental landlords directly. Our entire business model is predicated on partnerships. And based on our analysis, there's roughly 8 million rental units in the US managed professionally. And we'd love to see that grow larger. But those are also, for us, we believe the best risk. As I touched on earlier, we believe strongly that property managers are better at picking tenants, have established processes and procedures for getting bad tenants out, and then can get units rented more quickly. And for all those reasons,
which lowers your risk as an insurance provider.
Correct. Which results in better outcomes from an underwriting perspective.
Okay, makes sense. So your interests are aligned directly with property managers. They're your focus.
Yes, they're our focus, and we just did a giveaway today to a property management conference for people that could enter, because we view property managers as our partners. And again, as the reason I mentioned some of our competitors earlier is because a rising tide lifts all boats, and we want to see everyone do well. We want to see landlords have access to this solution so they can have better outcomes, and we want to see property managers to be able to benefit from this as well.
Yeah, I love it. I believe that too. So, but I have said before, rising tide raises all ships, but sometimes the bar is so low in property management in some areas and in some markets that I don't think every ship's going to rise. Some have too many holes and they're going to sink, but that's okay.
I think that's right. I mean, it's Darwinism, right?
Right. Survival of the fittest. So, well, cool. So, what are some of the most frequently asked questions or concerns that property managers are asking you or have been asking in sales conversations so that we can make sure that we address them here on this, here on the show?
Sure. So a lot of things that property managers ask is simply, how does it work? We've got a FAQ section on our website, and we can share the link on it. But how does it work? Why doesn't this exist? How come no one else is doing this? And as I touched on, this is the third time I'll mention SureVestor and Rent Rescue and others.
Yeah.
The awareness is growing. And that's what the biggest challenge is for all of us in the space, is awareness that these types of solutions are available. This isn't like, renter's insurance, or pet insurance. Well, pet insurance, I guess, is just now getting widely adopted, but people don't know about it and don't understand it. But most of the reactions we get is, wow, this exists, this is great, how does it work? Oh wow, that's inexpensive, this makes a lot of sense. And it all depends on the property address and rent amount for the pricing.
So, for anyone that's confused, let's just explain the difference between renter's insurance and rent default insurance.
Sure. So renter's insurance, some renter's insurance covers the renter's possessions and liability to the landlord, generally speaking. And so it's paid for by the renter. They're doing it so if there's a fire in the unit, they're not covered from the landlord's policy. Their possessions are gone. The landlord gets their unit rebuilt or house rebuilt, but they don't receive anything. Or if now with renter's insurance, they would get some coverage for that. If for the landlord's perspective, if the renter has renter's insurance and they have a guest over and they slip and fall and break their leg, it protects the liability to the landlord from them getting sued for that slip and fall. And so that's renter's insurance. Rent default insurance covers it depends on the program, that different people have different features, but generally speaking, covers lost rent due to tenant skips, eviction, or the tenant non-payment for whatever reason.
Okay, perfect. I just want to make sure anyone listening, sometimes we have to make sure things are at an 8-year-old's level so that everybody gets it. So that everyone's clear.
I generally need things at an 8-year-old level to understand as well. So I get it.
Right. Most entrepreneurs do, because we're just so damn impatient at paying attention to things sometimes. All right. So we talked about, like, how does it work? Why isn't anyone doing this? Any other frequently asked questions that people are concerned about?
What's the catch? Generally,
Yeah,
what's the catch? People generally have, insurance companies, for better or for worse, generally don't always have the best reputation for making it easy to submit claims, etc. Right. But so that's another thing. Some people want to see the policies and see things of that nature. But I think, again, I think the big thing is people just don't understand that these types of products exist. And so that's why we're out there educating the market and letting people know that there are these types of coverages available, and you can get the coverage for these types of risks.
So let's touch on the benefits for a property management business in having this in their repertoire of services, and how this can help them sell and close more deals, give them a competitive advantage, maybe.
Sure. So what you've seen is property managers are now looking at this, and some are saying, I'm just going to include it in all my plans. And because of, and say, this makes a lot of sense. And now I've got a differentiator. All of my property management packages include 3 months of rent default insurance if a tenant goes bad. and they're out there marketing saying that includes it. Others are saying, this is interesting. Let's how can we offer this and as and earn some fee revenue? The only way it works, as I touched on earlier with compliance, is you can't get paid for the sales, solicitation, negotiation of insurance unless you're an insurance producer. And so you can do other things such as marketing fees, et cetera, but it can't be conditions on the sale, solicitation, negotiation of insurance. So that's why we've spent so much to make sure that anything we do and anything our partners do in a partnership with us is fully vetted and above board to make sure that everyone stays on the right side of the rules.
So do they become somewhat of an insurance agent, or you just
No,
avoid that altogether?
no, they do not. Yeah, they do not become insurance agents in any way, shape, or form unless they've got an insurance agent license. Then they could be an insurance agent, obviously.
Okay, right. Okay. So, cool. Well, John, it's great to see an entrepreneur like doing something that's impacting the industry. I believe these products are going to have a massive ripple effect on the industry. I think they're going to create a lot more safety and certainty in the property management space. It's going to lower the risk. It's going to lower the pain threshold for landlords to trust somebody else to manage their properties. And I think it's going to protect all the parties involved. And I think that means it's going to help the industry grow. If Australia and some of these other markets are any indicator, it seems that these type of products have helped these markets grow significantly in a relatively short period of time, like over a decade. They've grown phenomenally. I heard stats like Australia grown through 25% in a decade, and largely they claim that it was connected to that. I don't know if that's accurate or true, but if that were true, and the industry, single family residential, were at maybe about 30% are professionally managed, that would
Yep.
almost be our industry doubling here in the US. And I don't know that there's enough companies here in the US right now to handle that level of growth. That would either mean we need to double the amount of companies, or we need to double the size of every company that exists, something in between that.
Let's double the size of every company that exists. That'd be a good outcome for
I think
everyone,
that would
right?
be good. Yeah. So, but regardless, we want to make sure that we've got the best. And so let's raise the tide. Um, so I appreciate that you're seeking to raise the tide. I think collaboration over competition is what builds markets. It's what builds the category. And it's always important to build the category before you try to build the individual brand. I mean, that's like marketing and 101, everybody. And property management, I think, is in the same boat. Property management has very low awareness in general here in the US. And right now we've got a lot of people going around thumping their chest trying to build their individual brand, and we need to build the category first. And so I think there's a lesson for the industry to take away from what you had mentioned and what's going on, what you're doing. So I appreciate that. All
Well,
right.
I think NARPM's done a good job trying to get the industry moving in the right direction. I think people like you and a lot of others that are trying to educate and build awareness are very helpful as well. So it's great to see everyone working together in some way, shape, or form.
Right. I think there's not scarcity in property management. There just really isn't. There's 70% in single family residential that are self-managing right now. That does not indicate scarcity.
Yep.
But in certain channels of marketing, there is a lot of scarcity because
Yeah.
everybody's doing the same stuff. But there is scarcity. And so DoorGrow to hopefully change that. And I love that our interests are aligned. So John, I appreciate you coming on the show. How can people get in touch with Steady and learn more about this? And
Sure. They can go to
want to leave them with?
Yeah, you can go to the website, www.steadymarketplace.com, or shoot me an email, john@steadymarketplace.com. That's JOHN STEADYMARKETPLACE. God, it's a long name. .com.
Well, you got it out. All right. Perfect. John, I appreciate you coming on the show. Appreciate what you're doing. And I wish Steady success.
Thank you, Jason. Thanks for having me.
All right, perfect. So check them out at steadymarketplace.com. And if you are, for some reason, not achieving the growth that you want. Your growth is good, but you want to like pour a little gasoline on that fire. If you find that you're getting a lot of your business lately from word of mouth and from the trust that you've built in the marketplace, I would love to pour gasoline on that fire. That's what DoorGrow specializes in optimizing your warm lead funnel and optimizing your business for more organic growth, which is a lot less expensive than shelling out thousands and thousands, tens of thousands of dollars in a year towards pay-per-click and SEO and everything that everybody is competing and already doing. Like I said, I don't believe there's scarcity in the industry, but I believe there's false scarcity that's been created by marketers, and you can avoid that. And for those that can't see, I'm wearing my SEO won't save you shirt. A lot of people are relying on SEO to save you. Don't get me wrong, SEO is great. If you have the top spot on Google, that's great to have search engine optimization, but there's things that are better than having the top spot on Google, like being the most trusted company in your market. And our whole system is focused on building trust for your brand and for your business and helping you to go after that blue ocean where there's all that business available, that 70%. So appreciate John being on the show. And until next time, to our mutual growth. Bye, everyone.